Hey traders, this is Blake Morrow with Traders Summit, and with me today is once again Oscar Salem from Biscuit Capital. How are you, Oscar? Good to see you again.
Thank you, sir. Thanks for having us. We're doing well. We're doing well. Interesting times right now.
They are, and you know, speaking of which, I mean, stocks, they're just at the time of filming, they're just coming off, 4,700. The market's down a little bit today. Tesla's down like 5-6%. So we're seeing a little bit of pullback, but I have to compliment you. The last time that we brought you on here, you talked about being long the dollar and being bullish the dollar, and the dollar actually hit 2021 highs like literally this last week. So great call. So what's on your what's on the agenda today? What are you seeing, and how do you see markets developing from here? Because stocks at all-time highs, you wouldn't think the dollar would be this strong, but it is. So so where do we go?
So tons of crosswinds. We've become a little bit more cautious on the dollar simply because of the magnitude of the move that we've seen the last 30, 45 days. It's been pretty big move. And one of the things that we look at when we make calls on FX and on any market for that matter is crowd behavior, right? Positioning of the market and where things lie. So we're a little bit cautious here. I think that it is a crowded trade. I think that short euro is a crowded trade. Short yen is a crowded trade. Short bonds is a crowded trade. So all of those things I think are percolating around what could be a little bit of a risk-off move here, led by rates and FX, I think.
So let me ask you this, Oscar. If we have a risk-off move, where's the dollar fit into that? I mean, in days past and in times past, the stock market selling off would elicit US dollar buying. And, is this time different?
That's a really good question. Every time we ask the same question, is this time different? Right? The charts to me, when I look at the euro and the chart, to me, it looks like it's carved the bottom. And to me, it looks like it should go higher, right? Based on the chart, and when we can share it right now with you guys, I have a couple of setups that I want to share. Based on the chart and based on what we feel positioning is, it feels to me that the dollar is in a little bit of in a tough spot here that it could correct, particularly against the majors, right? Which are euro and the yen as well.
So I do want to see your charts, but before we see your charts, let me ask you one question, and I want to see if you have an opinion here, because it could be any moment where we get a new Fed chair announced, and being that Powell and Brainerd were at the White House this last week, looks like Powell's job might be in jeopardy, but bringing in Brainerd's going to be another dovish Fed chair, we think. Do you have any opinions before we see your charts? Do you have any opinions on how the dollar might react?
I'm leaning more towards Bostic, to be honest. I don't think she could get approved. I don't think it would be a very tough pass in Congress for Brainerd to be put on the Fed chair because of her stance, because of her dovishness. I think Powell's time is up, and so it's definitely going to be interesting, and it's definitely going to be influential on markets.
But now then that may contradict a little bit about what you're saying about the dollar, because if Bostic is nominated, that would really shake up the Fed, and that should bring dollar strength. Would you agree? That remains to be seen. Okay.
I rely more on sentiment and charts. That we're very big technical traders.
Sure.
And I think that the markets have a weird way of pricing a lot of things and anticipate. Yeah. Right. So we have to be a little bit more of a second level thinking shop to ride these waves higher. So it's gonna be interesting for sure.
It is. Okay. Well, enough chat about that. Let's see your charts. Let's see what you're looking at, because I'm interested. You got me sold. Let's see it.
Okay. So we're going to start with a euro. I'm going to share my screen.
I'll let you know when I can see your chart, because I can't see it yet. Oh, there we go. And I see, looks like yields there. Okay. Yep. I can see the euro. Perfect.
Okay. So this is our chart of the euro. and I can expand it here. There is a big level, what we call the land in the sand, and it's right around 114.80. Around 115, it starts getting interesting. 114.80 is where you have to bail if you're playing euro from the long side. One of the very interesting things that we see here, and I don't know if you can check this out, is there's some positive divergence here. So that to me tells me that there's some seller exhaustion in the euro, right? It seems to me like it's carving a bottom with a very clear line in the sand. So when we make a call, when we take a position in FX or in any asset for that matter, the most important thing for us is risk reward, right? How much are we risking for how much potentially can this move in our favor? So here you see that we're risking 70 points, 80 points to make 300 points, right? So regardless of anything, I think that that's the number one thing that we look at it. And to us, with this positive divergence forming down here on the RSI and where the level is and what the line in the sand is, I think the risk reward is great to be long euro dollars for a mean reversion counter trend rally on the asset. Not our favorite chart, but we do have that on. I would love to share our favorite chart, of course.
I'd love to see that.
So in FX, we feel that long EURCAD is fantastic risk reward. This cross to us has carved the bottom. I think that positioning is also an issue here. You know, Bank of Canada hawkishness is well into this price. It was anticipated, it was well telegraphed, and it was reflected in the price. Now we see a bottom being carved. We know where we're wrong here, which is the most important thing.
That totally is, and I 100% agree with you. Having that risk right below and knowing, hey, I'm wrong just below here. But let me ask you this: you know, crude oil has been obviously very strong. It's played well into, you know, some of the Canadian crosses. What happens if crude continues to 100? And obviously, if crude starts to pull back, this is gonna do well for your Euro Canadian. But what if crude continues its trek higher towards the big $100 mark?
Well, let's look at the fractal.
Okay.
Nothing mentioned crude. We have obviously there's a trend higher, right? We do feel that crude has hit a short-term top, right? We are watching 77 as a level, where if you're long crude as a spec position, you probably have to bail if 77 gets given. So we think that it correlates well, right? We think that crude has topped out a little bit here at 85, 84.50, 85, as a, you know, culmination of a wave 3. Now we are in a corrective wave in crude, which could get a little bit more severe if 77 in our chart, if 77 gets breached, that correction could be a little deeper. So yes, we look at the correlation with crude. Obviously, you know, there is a little bit of a bull run going in crude, an energy crunch. Obviously, we're very aware of that, but you know, we're also very aware that markets don't move in a straight line, and there are corrections.
Sure. Well, if it makes any if it helps you at all, I think you're probably I lean towards your analysis in crude for sure. So you were talking a little bit about rates. How do you feel about how do you feel about, you know, where, you know, the 10-year is, what's happening with inflation, and any opinions there?
All right, so I'm going to pull our rates chart. Let's start with a daily. So I think the market again is positioned wrong here.
Okay.
We feel that, you know, and this is just a short-term fractal from the recent bottom to the recent top. We feel that there is a line in the sand here around 138 in the 10-year. You know, this chart to me looks very offered, right? So it indicates to me that bonds could rally, right? And again, this is a technical call that has positioning in mind. So I joke around. Obviously, fundamentals matter, but I joke around a lot with other traders when I say I truly don't care about fundamentals when I see a chart like this, right? So I do watch them. We do care about fundamentals. That's in jest, but this chart to me looks offered. More so than that, if you look at the longer term chart, and that was something that I was looking up this morning. Bear with me one second. Throughout this bond rally, we've seen these type of double tops form, and the follow-up move to these double tops being formed has been a sharp rally in bonds, right? So this plays in well with what we're seeing in markets in regards to the overall appetite for risk, or how risk is so, perfectly priced at these levels. There could be some rotation into bonds. I don't think this is a very offered bearish chart, right? So based on price action and risk reward, we can see a little bit of a bond rally here.
Yeah,
again,
and I mean, that's the definition of a downtrend, right? Lower highs and lower lows.
Yeah.
So
yeah, and I'm not an economist. I have to put the caveat out there. I'm just a chart monkey, and to us, this looks good. And this plays well into another chart that I want to show you, which is cross yen, and we'll start with Swiss yen. This is a great chart. We have an order to sell here. Again, a very clean count for us. Another significant data point that now we can trade against that high, right? We can trade against that high that was formed in this chart. It's very defined risk reward. We feel that a bond rally, and this is the fundamental part of us, a bond rally could translate into yen strength. The chart is stretched, and more so than anything, we know positioning is very, very one-sided in short yens. So books out there are short yen. It is the right trade fundamentally to have. It is a counter trend move, what we would see here in cross yen, but those counter trend rallies could be fierce, and position washouts are something that you always have to be aware of, in not only in FX but in everything, right? So we feel that we could see a position washout here in cross yen, in bonds, a little bit in the dollar as well, just to clear some of those books that are so tilted and heavy at this point.
And, just to go along with what you're saying, most of the FX traders, especially a lot of the retail community, they're really more focused on the dollar yen. 112.50 seems to be a big magnet. And if you're talking about a washout in yen, meaning stronger yen, maybe that dollar yen takes us back below 112.50, maybe towards 112, maybe even below that. And perhaps that might be the catalyst.
So here you have the dollar yen chart on the weekly, a clear top that if you're sizing your risk appropriately, that is a data point on the chart that you can use to size your trade, right? Obviously, this has a lot of room, right? Significantly lower than 112. If you look at the daily chart, yes, this could give up a lot of the gains that it's recently had, and these are classic position washouts, right, in FX. So line in the sand, yes, around 112, you could see this getting interesting, right? So part of being in management of risk, or risk management, you have to kind of understand crowd behavior, right? Yes, in this environment, being short yen was the right trade to have, and we did write this trade. But at some point, you have to be ready for a mean reversion, right? And I think that we're close. I think that we are at the onset of what could be a nice little mean reversion trade.
All right. Well, Oscar, I want to say thank you so much for your insight, and your charts. I love the setups that you've got. And my takeaway right now is that bonds might, the yields might have a little bit to fall, and bonds might rally a little bit, and we might actually see some dollar weakness, on contrary to what other traders might be thinking. So we're going to be on the lookout for that. And I want to say, thanks for spending your time with us. But if I'm a trader, I'm at home, I'm trying to figure out how do I follow Oscar Salem? How do I follow you, and how do I find out more about you?
So my Twitter handle is pretty active. It's Oscar Salem, and it's a play on and I've considered changing it, but it's so meaningful to me because it's a play on my kids' names.
Oh yeah.
It's at Bell Haas, but you can find me under Oscar Salem, and we do have a fantastic blog on our website that we build called biscuitcapital.com, where we dive into these charts, we explain them, we put a thesis forward, and everything that we do, not only for our website and our for the independent traders, but we do manage money. Everything that we do, we always have the number one goal is to control our downside, right? We always know where we're going to be wrong, and we try to transmit that message to our subscribers and to our investors that we're going to control the downside. We are going to take shots when there's risk reward, and when the risk reward indicates that we can take a shot, but we're not going to be stubborn, right? So we understand that what I'm talking about today is very counter trend, right? And those trades, when they're counter trend, you have to be careful, right? You have to know where you're wrong. You have to control that downside. But we also know that these counter trend rallies can be very, very powerful. So I think we're on the onset of one of those. We're going to be careful, and everybody should. Everybody should know where they're wrong and know how much risk capital they have on the market. We do, but we're taking a shot here.
All right. Well, Oscar, thank you so much for your analysis, your insights today. Remember, folks, if you like what you see here from Oscar Salem, make sure you subscribe to the channel, the Trader Summit channel, so you don't miss any of his analysis. Give us a thumbs up. Thank you, sir, for being with us. And I'm going to look forward to, seeing you again before the end of this year, so I could get your views going into 2022. Sound good?
Thank you, sir. Yeah, absolutely. Anytime. My pleasure.
All right. Well, Oscar, thanks for joining us. We'll talk to you soon.
Sounds good, my friend. Thanks for having us.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.